connections this week. And when it comes to owning racehorses, one very important facet is horse insurance. Richard Logan is the boss of Logan's Insurance, and I recently caught up with him.
Yeah, Dad started in about the 1963. He was a life insurance salesman. He didn't like selling life insurance, so he moved over to general insurance, and the odd client said, "Can you insure a horse?" And it was right at the very beginning of horse insurance in Australia, and in fact horse insurance worldwide. So we're talking in the early 60s there, that people only just started doing horse insurance, and it was written as part of like a marine transit policy almost. And one thing led to another, and he a few years later he met a guy called Bob Lapointe, and Bob ended up being a great family friend and still is. And he was going to bring quarter horse racing to Australia, and he brought a whole heap of quarter horses, something like 200 quarter horses, and Dad started insuring them, and slowly this thing, he thought, oh gee, I'm really interested in this, and Lapointe was always very excited about it, and so they actually ran a few rodeos, world title rodeos in Canberra with the backing of the American government, and he did a couple of world title rodeos in Sydney with John Singleton was back that when he sold off his advertising agency. He had a bit of spare time to fill in, and a little bit of quarter horse racing down around Queanbeyan, which it never really took off because the AJC controlled racing, and they said you're not going to have gambling on quarter horse racing, which was probably a pretty smart move by them, and it kept the quarter horse racing down. And so sort of from the 1974s, we're sort of concentrating more and more on thoroughbreds, and owning horses is a good baptism of fire of learning what all the problems are that can occur, and one thing led to another, and I came along around that time, and I just remember being a kid and we're going to horse sales in Dubbo and race meetings all over the place, and in those days it seemed everywhere you went there was some sort of horse event, and if I wasn't there I was under the desk at the office while Dad was on the phone talking to people about horses. So it was interesting childhood, and we did lots of things together.
Is insuring your horse any different to insuring, say, your house or your car?
It is a little bit, in so much as the key thing is that a horse has a brain and a car doesn't. So you can put a car in the garage and pretty much lock it up and go away and nothing will happen to it. But if you put a horse in a stable and lock it up and go away, as sure as anything it'll kill itself or get cast, and it could get colic or break a leg. So there's lots of things they can do. They're a big body with a little brain.
Why should owners insure their horses?
Well, horses die. It's a relatively high premium, but in comparison to car insurance, it's probably a little bit less. They can just break legs, have colic, you name it, they can do it. It's just, there's not, almost every year there's something new that a horse does that you think, there's just no way they could do that. We just recently had one who strangled himself on the fence, which was supposed to be a totally horse-safe fence, but the horse worked our way out to do it.
Do the big operations insure their horses?
Most do to some extent.
Woodlands down the track in the past, I understand.
Yeah, they do. They may not insure everything, but they do, key things, or key capital assets, or a lot of studs like to protect their income, so they'll insure their foals right through to their yearlings, because that's a key component of the income to keep the stud running for each year, or if it's not a stud, a small breeder or large breeder, just keeping the money flowing so they can pay for everything.
Well, as we know, horses that perform well on the track, their valuations can soar. How do you handle the valuation of horses?
If you go to enough sales, you get a fair idea on what what's happening in the horse market. There's 20,000 horses sold a year in Australia, and you've only got to attend a few sales and see what they're going for. So it's not hard for those in the business to get some sort of idea of the value. And there's always some can be purchased for $1 million and they're worth 5,000, and some can be purchased for 5,000 and they come out and they win a Group 1 race and they're worth millions.
They're the ones you want?
Yeah.
Now, Richard, insurance brokers cover a wide range of areas. What are some of those areas that you guys?
Yeah, well, we specialise only in horses, and within that horse category, you've got mortality, theft, transit, and then some other things like stallion infertility, and another one which is unborn foal. So in effect, you can insure your horse from conception right through until they're 18, 19, 20 years of age.
And hopefully by that time they're a highly successful stallion for you, if they're a colt.
Well, you get the good stallion, even if it's a bread and butter stallion, that's what generates a lot of income. So, and the only way to survive in this business is to have things that generate income, and stallions are probably, if you get a good one, they're the ones that generate the income.
Absolutely. Now, let's talk about syndicated horses, because there are quite a few owners out there. They don't own 100% of a horse, they don't even own 50%, they might own just the 5% of a horse. Are there any dramas with owners insuring just their 5%?
No, there's not. I mean, that's the biggest growth in the horse business is the syndicated horses, whether it's private syndications or the public syndications. They're just what's driving new ownership in the horse business is not too many people that come in and own horses 100% now. And the guys that do own 100%, they've sometimes come in on the back of a small syndicate, whether it's 10 or 20% or even, as you said, 5%.
Just got that taste for it and gone a little bit further?
Yeah, well, I always think that people have got, if they've got the horse DNA, the interest in the horses, it only takes something to trigger it, and whether it's a good day at the races or ownership in a bit of a horse, and it triggers it, and then they do go into ownership or more ownership.
How important are vets when it comes to horse insurance?
Well, vets play a pretty important role when it comes to insurance. Firstly, when you insure the horse, nearly all horses have to have a veterinary certificate, not dissimilar to life insurance. So before they go on risk, you have a veterinary examination or a medical examination to say, yeah, everything's fine and you can cover it for all the risks. And in the event of a claim, well, obviously any injuries or sickness during that time, the horse is treated, and then in the event of a claim, there's usually an autopsy required and a few treatments that normally have gone on beforehand.
Well, Richard, we all want to win the big Group 1 races, but sometimes things can go pear-shaped. Can you tell us about some of your bigger claims?
We've had some quite big ones. In April 2007, He's No Pie. He was a very big claim. We broke down at Randwick, but he was so badly broken down he had to be put down.
And we're talking about a Group 1 winning colt from the family of Reduced Choice, I think,
That's
like
right.
a well-bred horse.
And he was going on, he could have been anything, so it was a great tragedy. Whilst it was a very big claim, he was probably underinsured as well.
We don't want to talk about this topic too much, but how was thoroughbred insurance affected by equine influenza?
Yeah, in terms of that, we had a few loss of income. A lot of the studs, not a lot, but a few of them insured the income for the stallions that come in from overseas. So we had a few of those claims. The EI pretty much affected the older mares, which in the 18, 19, 20, and the sick ones are ones with compromised respiratory systems, and the very young foals. So a lot of them weren't insured or weren't able to be insured. What we did find, and this is anecdotal after the event, but the horses fought off the EI, but then a month or two or three, something else would come down the track like colic, even laminitis, and they just didn't have enough inside gumption to get, in the normal case they'd get over that, but they fought so hard with the EI that they lost that energy to pull them over if it was a colic or a laminitis type of event.
So it's fair to say there was a heightened number of claims during that time?
Yeah, and indirectly too. I think the more claims were indirectly than directly from the EI.
Well, Richard, we see horses travelling all around the world, stallions coming to this part of the world, mares going back, horses travelling everywhere to race. How has the globalisation of the horse game affected horse insurance?
Well, thanks to planes and the speed with which and the less stops they have to make to travel around the world, the horse business is getting smaller and smaller. And then you throw on top of that the internet, and you go anywhere in the world and they know what's happening in other areas. You're seeing more and more horses travelling. I think there's flights interstate in almost every other day. There's flights overseas at least once a week, and at big times when the stallions come in from overseas, there's a flight could have $100 million worth of horses on it, which if it went down, that'd hurt the horse insurance industry. That's a very big risk for them.
Yeah, it was nice to catch up with Richard. He's a good man and very informative when it comes to all things to do with thoroughbred insurance.